Good morning. You're watching a remote broadcast of Business World Live. I'm Jess De Los Santos. It's 10:31 a.m. this Thursday in Manila. We are just an hour into the first trading day of the month. Let's go straight to our top story. The administration's economic managers are assuring the public that the country will weather the COVID-19 crisis, saying the government is doing its best to bring the economy to a recovery path. Speaking at a virtual pre-SONA forum, Finance Chief Sonny Dominguez admitted that the economy is having a bad spot, but expressed confidence that it will come out of the situation and will probably be even stronger than before. He says signs of economic recovery are now emerging, pointing to higher tax collections in June, as well as the continued reopening of the manufacturing sector. In relation to this, Dominguez reiterated his proposal to ease movement restrictions in Metro Manila and Calabarzon, saying these regions account for two-thirds of the GDP. He says the reality is that virus won't go away until a vaccine is found, and for the meantime, people must get back to work while staying safe. Dominguez also assured the public that the government has capacity to pay loans, saying it's borrowing funds for COVID-19 response at very low rates. He is also pushing for the passage of the Sitira law, while he notes that the Build program would be the best way to revive the economy given its high multiplier effect. President Duterte himself touted the massive infrastructure project in a Tate message. BSP Governor Ben Jokno and Acting NEDA Chief Carl Kendrick Chua have also expressed confidence that the country would hurdle challenges posed by the crisis. However, the president earlier said in a televised speech that reopening the economy should be, quote, circumspect amid rising cases. The president says the country is still grappling with the first wave as he urged the public to obey quarantine restrictions. All right, lots of developments coming from the pre-SONA forum that we've had yesterday, coming from economic managers, seemingly, raising the white flag for this year, but putting out some level of optimism, at least for 2021, seeing signs of recovery as early as now. That ranges from manufacturing activity all the way to customs collection. Let's see how that is affecting market movement as we speak. As you can see right now in this chart right here, the index is still in the negative territory here, somehow reversing track from the gains that we saw on Wednesday. The index is now down by 0.8% to 6,233.36. Yesterday, like what I mentioned, the index crunched up some last minute gains here. A bargain hunting happened before the close, pushing shares up 0.3% to 6,285.50. Prior to that, it was all sideways trading for the most part of Wednesday's trade. But as you can see, things are going back to our losing ways here. Again, the index is down 0.8%, according to Japet Tanchanko of Philstocks Financial. He colors it for us yesterday, saying the downside to our Wednesday's trading was still lingering worries over COVID-19 sentiments, being weakened by intensified increase in local cases and the World Health Organization's warning that fatalities might actually rise again. Yesterday, you have the health department reporting cases just at around past 9 in the evening. Again, you have COVID-19 cases in the country surpassing 2,000 levels. That seems to be the new normal now when it comes to COVID infections in the country. We have surpassed the 50,000 mark, and we have reported this is the third day that cases have been rising by as much as 2,000, and that might actually still dampen investor sentiment as we speak. Again, the index down 0.8%. But again, yesterday, those plunges in shares that we saw actually attracted some last minute buying. That's according to Tanchanko. In fact, you have net foreign outflows also at a narrower clip yesterday at 376 million pesos. But back to our top story, lots of assurances as well coming from our economic managers from the pre-SONA forum yesterday. BSP Governor Ben Jokno signaling that there might still be some room for easing. He says, that the relatively benign inflation outlook in the policy horizon is actually providing space for monetary policy adjustments to combat the crisis. That, of course, follows inflation coming in at 2.5% in June. That is a quicker pace than the 2.1% back in May. He says as well that is consistent with the forecast that inflation will be benign within the next 3 years. The BSP as well is projecting a liquidity injection of as much as 1.3 trillion pesos into the financial system. That's around 6.4% of the country's GDP. But the question now is, will further easing be the best move? Let's try to ask Robert Dan Rosas of Security Bank later on in the show as we speak to him. But more to what was said during the pre-SONA forum this time regarding the NAIA upgrade after that stalemate when the consortium said, that the government was unwilling to accept the revised proposal, which they say is the only way to move forward given the pandemic. Now, you have Finance Chief Sonny Dominguez saying yesterday that there are two other proponents. He did not mention who, but he says that there are two other proponents willing to step into the shoes of the consortium, and that talks are ongoing with Transportation Secretary Art Tugade, as well as the Presidential Advisor for Infrastructure Development, Vivencio Dizon. Thing is, players are willing to enter into agreement similar to the terms of the Clark Airport project. But according to Dominguez, they are not completely setting aside the consortium. It's just that the consortium is the one that's setting aside the project. Recall, of course, the members of the consortium. You have Aboitiz Infrastructure, there's AC Infrastructure, Alliance Global, as well as Lusitans Asia's Emerging Dragon, Philinvest Corporation, and JG Summit. And rightfully so, let's have a check of our leaders and laggards, and let's see where these consortium members at least are faring, at least at the start of Wednesday's trade there. As you can see, Alliance Global, as we speak, is one of our gainers here. They are up 1.3%. Likewise, consortium member JG Summit here is also up 0.3%. And one other interesting news stand here about JG Summit, their unit, Cebu Pacific, is saying, according to a report from Inquirer, that they are going to lay off as much as 800 workers come August this as they try to rationalize operations given the new normal. But more to our consortium members here, LT Group as well. As you can see here, they are, of course, with Asia's Emerging Dragon. They are now down 1.9%. But at the same time, other losers here we have Jollibee Foods. They are down 2.7%, as well as Aboitiz Power now inching lower at 2.7%. Now, off to other corporate stories here. There's Phoenix Petroleum issuing commercial papers worth 3.5 billion pesos. That is the fourth in a 10 billion peso program. The primary amount of that is set at 2 billion pesos, with over allotment option rather of up to 1.5 billion pesos. They are expecting to rake in as much as 3.28 billion pesos from that fundraiser. They are saying that the proceeds will finance capex for regular importation of fuels and lubricants. Let's have a check of how Phoenix is performing at the start of the trade. They are down 0.7%, priced in at 11 pesos and 36 centavos a piece. But I guess no other stock to keep an eye on today other than ABS-CBN. It's D-Day for the media giant here. You have House lawmakers expected to vote on the ABS-CBN's franchise bid later today, and it's been a topsy-turvy week for the stock, gaining one day. We did see the stock gaining as much as 4.7% at the start of the week here, on hopes that lawmakers are going to approve the franchise, but then again losing or at least dipping in some of the days this week here. Fitch Solutions this time around has something to say about ongoing proceedings here. According to them, the forceful termination of ABS-CBN and Sky's broadcast are highly politicized and clearly linked to President Rodrigo Duterte's opposition toward ABS-CBN. This, they say, adds to factors that discourage investment in the country's telecom space. And it's because of that they're now cutting the industry's risk score, slashing it to 46.1 points out of a possible 100, down from 57.5 previously. They're saying that current regulations are fluid and inefficient. Fitch is also saying that the regulator's apparent ability to be influenced by the government continues to be a key impediment to foreign investor sentiment and has also made the telecoms landscape difficult for both new entrants and existing players. Problems really just piling up here for ABS-CBN. Just yesterday, they announced plans to shut down all shopping after 2 years of losses. And looking at how the stock is performing, they are in the negative territory as we speak, now priced at 14 pesos and 80 centavos a share. On the other hand, here, very interesting to note, as you can see in this chart represented by the yellow line, you have GMA shares gaining even as much as 6% earlier in the day, but somehow paring back those gains. The stock is now priced at 5 pesos and 80 centavos a piece. So definitely lots of developments that we have to keep an eye on regarding ABS-CBN as the lawmakers are expected to vote on their franchise bid. Now we'll have more of the markets when Business World Live returns. Stay with us here on One News. Economic activity is projected to follow a U-shaped recovery, quarterly recovery path, but that we might see further contractions up ahead. How does this color your projections for the rest of the year?
Well, if we talk about inflation, we're seeing that levels will be benign for the most part, probably in the 2.2 to 2.5 range. No? What we saw was a big jump in the transport index, no? And we expect that to be positive as more economies reopen. But we're still pricing in a GDP growth of around -4% in the meantime for full year 2020.
That's for full year 2020. But how
Right.
do you see? Because previously, people were thinking, at least a number of economists were thinking, we might actually see recovery in the third and fourth quarter. Now, the likelihood of that for you is no longer possible.
Yeah, well, if you say that a slightly negative number is a recovery path, then yes, no. Um, Projections right now are very difficult to do, no, with the fluid situation. Also, that's why, of course, uh, even the BSP has said that we're in for a very deep contraction in the second quarter, right? Uh, and probably a negative number as well in the third and fourth quarter, but not as deep as the second quarter. No, no. So if we say that we are recovering because the negative is because the projection is less negative, then yes, that could be some sort of recovery. Notwithstanding the base year effects. But yeah, for the full year, I think that's going to be still be some negative numbers for the succeeding quarters.
Mhm. But at least for the second quarter, how much of a shrink are you seeing here? Again, like what you did mention,
Mhm.
economic managers are saying, we are bound for that deepest contraction rather, at least in the second quarter of 2020.
Yeah, well, our estimate is around -9%, for the second quarter. Yeah, around that number.
Mhm. But given all the support measures being injected as a response to the pandemic, how sharp of a recovery are you seeing in 2021?
Well, for 2021, it will be important to look at the numbers month on month or even quarter on quarter, no, because again, it's going to be math, no. It can be a bit deceptive um, if we have a very low base for the second quarter next year. It's because we have uh, yeah a very deep contraction in the second quarter this year, no. So it could probably be around +9 or 10% for the second quarter, but that could be a bit deceptive, no, because of these effects. So what would be very good indicators of recovery will be probably this inflation for the next 2 years. You also have money supply. You also have production index, no? To be very accurate numbers, or better numbers to look at rather than GDP. No?
Mhm.
Yeah.
And speaking of which, where do you see inflation faring for the rest of the year as well as in 2021? Do you expect it to still at least be in the benign territory for the remainder of 2020?
Yeah, well, the fear right now is there's two schools of thought now. One is the deflationary side, and there's the hyperinflationary side. Now, we think it's going to be benign, or probably within the target of the BSP, now the 2 to 4% target. In the meantime, given that um, I think consumption has shifted or clustered towards more essential goods, and then people are more inclined to save rather than spend to non-essentials. No, so that's why probably inflation will be benign in the foreseeable policy horizon.
Mm-hmm. And speaking of which, after inflation still pretty much within that benign territory, albeit coming in quicker at 2.5%. Yeah, BSP Governor Ben Jokno now signaling that they might have more space for some policy adjustments here. What's the likelihood of this happening, and will this be a wise move on the part of the BSP?
Well, as of the moment, it might not be prudent if we cut this soon, no. But BSP is correct. No? They still have space to do that. If well, and they've been carrying the weight of the monetary policy side, or the total response of the government. No, uh, they're probably anticipating a not so strong fiscal response. So that's why they're trying to nudge spending. No, if you take a look at data from the BSP itself, we're seeing savings growing by around 6% since January. So that's a very high savings rate right now. Just goes to show that people are parking their cash. No, they're not spending, and consumption or in household spending is around 70% of our growth. No, so that's why the BSP did what they did in order to nudge some spending and get the economy rolling.
Well, you've mentioned it. How do we fare in terms of fiscal response here? We're talking loans after loans to cover the shortfall here. That's around $5.3 billion, if I'm not mistaken, at least in offshore, and 1.2 trillion pesos domestically. So, how do we fare as a country, especially when you compare it to our Asian peers?
Yeah, well, for our response, it's not really that thin. No, at least there's a fiscal response that we're doing. No, and it's more on the prudent side. I think we're trying to manage our credit ratings as well, because somewhere down the line, that's still going to be better for us. No, if we get to maintain or get our credit ratings upgraded. No, so that will be better for us relative to a recovery in the future. No, so that's why our response, and also we're also limited to the response that we can do. The prescription is 50% of the debt to GDP ratio, 9% of debt. No? So um, that's where we see the government going no, to be at those levels in the moment.
But in terms of borrowing, how much of a leeway do we still have?
Well, we can, as long as we're able to pay it, no. And I think yesterday in the PSONA, the DOF secretary himself has said that we have the capacity to pay off our debts, no. Of course, to some extent, no, that they can see relative to the future projections of revenue by the government.
Okay, and then what bright spots are we looking into at the moment to really help bolster economic activity? Where do you see signs of hope, at least when it comes to recovery?
Well, we're seeing some business activities returning, no? And if we look at the index of manufacturing index, that's a very good indicator for us, no? There's a correlation between better PMI numbers and growth, so that's some sign of economic activity returning, no? And also, if some infrastructure projects will be restarted or relaunched, we'll probably see more imports coming in. And well, of course, notwithstanding still contractionary demand, export side, no, that will still be a very good indicator of the return of some economic activities.
Mhm. But how bankable really are infrastructure projects at the moment? Of course, some of those had to be put on hold during the pandemic here. So, and you have the administration pretty much really banking on build as a strong cornerstone for the economy. But really, at this stage, how bankable is infrastructure spending given the current backdrop?
Well, infrastructure spending has a really good multiplier effect in terms of generating jobs and then creating some complementary industries. No, so the infrastructure project will be a very welcome push for us if it's restarted. No, but on the other side, you have these quarantine measures. You have this limited um, uh, area to work with. No, so what we're really hoping is a better nudge from the fiscal side, no? But at least with better infrastructure spending, at least we have that. No? It provides, like I said, a very good multiplier effect in terms of generating jobs and other investments.
But you actually expect that to be rolled out at pre-COVID levels.
Um, well, we have yet to see that. No, I think the safest period for us to be able to say that is once the 2021 budget has been crafted. No, so that's in that way we can see where the allocations will be relative to the BBB. No, because like you said, there has been a pause, no, and there were some allotments for the DPWH that were reallocated to the COVID response. No? So we have yet to see, and we're hoping, of course, that that gets revived soon.
Okay, one other thing that the administration has always been putting its hopes on would have to be, of course, tax reform moves here. How crucial is it for lawmakers to actually pass, create?
Uh, that's one of the bigger fiscal response from the executive side. No? So, well, it could have been better if there were other fiscal measures, no? Like a rise or the other fiscal legislations that were proposed. But at least create will also be some sort of a fiscal or a better fiscal initiative, no, that could generate more investments, especially to the countryside, and provide even more employment, no, which we need now.
And at the same time, you have cases soaring still. It seems to be like the new normal now is the country hitting 2,000 levels, 2,000 infections on a daily basis. Question now is how do we balance between revving up the economy and protecting public health?
Well, that's always just the harder balancing act to do. No, you have um, um, Secretary Dominguez saying yesterday that it's non-binary. No, if you have a choice between health and the economy, no, it should be non-binary. To some extent, that's true. Um, it's very hard to choose between closing down the economy and everybody suffering more versus opening an economy with rising cases and then spreading the virus itself. No? So actually, that's a very tough question to answer. No, I would be more on the exercising health protocols in order for us to uh, function within a limited operational environment in the economy. No, so yeah.
Well, I guess you're not alone when it comes to having a struggle answering that particular question there. But lastly, a big news today, ABS-CBN. I just have to ask you this: Fitch Solutions warning about how a politicized shutdown is an impediment to investor sentiment, foreign investor sentiment. What's your take on this?
Yeah, the optics will be bad, no, if it's not projected in such a way that they stick to the structural reforms that they've been harping about. No? If it becomes politicized, of course, that's going to be very bad on the optics. It's going to be very bad in terms of perception towards more investments in the economy. But that's the government contradicting itself. No, they want to pass create to attract more foreign domestic investments, and then you see these events happening. No? So um, um, it would be better if we stick to the structural issues rather than the political one. No?
Mhm.
And as I said, perceptions everything, especially in attracting foreign investments. No? So the optics can be good or can be bad, depending on how the messaging of the decision gets out. No? So yeah.
All right, that's something definitely that we have to keep an eye on for the rest of the day as lawmakers are expected to vote on the franchise. But other than that, a lot of things happening on the economic front. Thank you very much for your insights, Sir Robert Dan Rosas, Chief Economist over at Security Bank.
Thank you, Jess.
All right, now let's have a quick check of what's happening on the local bourse here. We are extending those declines that we did see earlier in the day. We are inching lower, 0.8%, still at a 6,200 level at 6,235.62 to be exact here. Again, we did manage to eke out some gains yesterday after some last minute bargain hunting, but then we are failing to extend those gains here. That, of course, following over 2,500 cases reported last night, with infections in the country already reaching 50,000. At the same time, a number of factors as well. You have economic managers saying that they are seeing some signs of recovery, but that too might actually have to wait until 2021. But there are some specific stocks here that we have to keep an eye on, at least when it comes to our leaders and laggards here. You have JG Summit now up 1.7%. That's despite their unit, Cebu Pacific, announcing, that they are going to lay off at around 800 workers starting August. This is they try to rationalize their operations, given that according to them, Cebu Air is too big for what's going to be a new normal in the airline industry. Again, the stock is down. Sorry, JG Summit is gaining 1.7%, but perhaps we let's have to check how things are faring specifically for Cebu Pacific. In fact, they are also gaining at the start of the trade year. Cebu Pacific is now priced in at 41 pesos and 70 centavos a piece. They are up 0.7%. And then lastly, we've been talking about them since the start of the show. ABS-CBN, as the lawmakers are expected to vote on their franchise bid. As you can see, they are in the red, down over a percent to 14 pesos and 80 centavos a piece. However, on the other hand, as you can see in this chart represented by the yellow line, GMA shares are still experiencing some gains here. They gained as much as 6% earlier in the day, paring back those gains a bit, but still priced at 5 pesos and 70 centavos a piece. Definitely, this is something that we are going to keep an eye on all throughout the news day. And that's a first look into the business day this Thursday, July 9, 2020. Catch us again tomorrow at 10:30 a.m. I'm Jess De Los Santos, VR1 News.